Hi and good morning. On behalf of HC Andersen Capital, I'd like to welcome you all to this presentation of the report from the first half 2024 from SKAKO, and there's also the report from the second quarter 2024 that was published earlier this week. My name is Rasmus Køjborg, and I have the pleasure of welcoming both the CEO of SKAKO, that's Lionel Giraud, and we also have CFO of SKAKO, that's Thomas Petersen. They promised to take us through the quarterly numbers and also some highlights for the first half here, and also a little bit focus on the minerals parts. So a warm welcome to you first. And before I hand over to you, also a warm welcome to those of you who signed up for today's presentation. You can ask questions in the chat, and I can see there's also a good number of questions, but if you have any, you're welcome to add them in the chat. You can either do it in English or you can do it in Danish if you're more comfortable with that, and I'll help with the translation. But with that, I'll pass it on to you, Lionel and Thomas. The floor is yours.
Yeah, thank you very much, Rasmus. And more or less as the last couple of years, then I will make the introduction to SKAKO, taking the financial part, and then Lionel will take us deeper into the minerals customer segments today. And I will end telling a little bit about our guidance. So welcome everybody, and very nice to see that you will use your time here on a Friday to look into the numbers for SKAKO. We have the normal disclaimer due to the fact that we are, of course, looking also into a little bit into the future, and that is, of course, subject to risk and uncertainties. Then the agenda for today is SKAKO, just short SKAKO at a glance, then the results for Q2. Then Lionel will drive us through the deep dive of the minerals and also the big order that we received early on this month. I will take the guidance and, of course, ending up with a Q&A session. Then if we look at SKAKO at a glance, then we are now a focused company, and we develop, design, manufacture, and sell high-end vibration equipment. We are located in Faaborg with our headquarters and have the main offices in Strasbourg and San Sebastian in Spain. The customer segments that we are in is recycling, minerals, and fasteners. We have today 2019 shareholders, whereas 94% is in Denmark. And the board of directors of management holds approximately a third of the share capital. Then if we are looking into the brief of the second quarter, then the revenue quarter by quarter is above 60 million Danish kroner, and in this current quarter we saw an increase of 4.3% compared to the same quarter last year. And that is good due to the fact that we have stopped the decrease that we saw in the first quarter, which was mainly driven by the decrease in the fastener customer segments. In this current quarter, we saw that the fastener segments was replaced by a growth of 0.1%, so that is more or less flat. Also, if we look into the numbers for this quarter, we can see that the plant sales has increased, and that is also the reason for that the revenue increased in this quarter. Plant sales increased by 6%, and it is driven by the segments minerals and recycling. After sales is stable at 17.8 million. And if we look at the historical figures, then we can see that normally our after sales quarter by quarter is between 17 and 19 million. So that is a good stable sales that we have from the after sales. We also realized an EBIT of 5.6%. That is a slight decline of 6.7% compared to the same period last year. And then if we jump a little further into the P&L, then we can see that, as I mentioned, the revenue constantly quarter by quarter is above 16 million. We increased the revenue current quarter with 4.3%. And if we look at the growth in the three customer segments that we are reporting on, then we can see that minerals in this current quarter increased the revenue with 10.6%. So that is very, very strong. And recycling increased by 4.2%. And that is a bigger growth than we saw in the first quarter for the recycling business. And then the fastener stabilized with a revenue more or less equal to the same level as last year. Due to the fact that our after sales maintained at approximately 18 million, and the plant sales increased by 6%, sorry, then we see a decrease in the gross profit. That is due to the fact that plant sales has a lower margin than after sales. So that is the reason for that the gross profit is actually declining. Also, the gross profit margin is going down with 2.5 pp. Then, if we look at the bottom, the operating profit, then we realized a small decrease on 6.7% to 5.6 million Danish kroner. And as you know, 2023 was also positively impacted by the catch-up effect after the COVID-19. So that is actually, as we see it, good numbers that the EBIT ends at 5.6 million. Then if we look at the order backlog that we have end of the quarter, June, then the order backlog was 16 million. And that is the same level as we have had for the last couple of years. We are every quarter above 60 million. But after the end of the quarter, as you also saw in the OMX that we released beginning of August, we received a big order for OCP in Morocco, more than 150 million Danish kroner. And as this is actually the largest order that SKAKO Vibration has received ever. So that will, of course, impact the order backlog when we are going into the next quarters. Then if we look at the first half of the year, then EBIT for the first half of the year ends at 10.1 million compared to 10.5 in 2023. And that is an outlook that we are looking into, that the second half of the year normally is stronger than the first half of the year. So when we realized 10.1 million in EBIT in Q1 and 2 together, and we maintain our guidance on 24 to 28, that means that we will have a stronger second half of the year, and that is also the normal way the business is developing if we look at the historical figures. Then if we look at the balance sheet and the key financial ratio, then we can see that assets increased by 3.4% to 236 million Danish kroner. The net debt decreased significantly to 28 million from 46 million last year. Then we also saw a decrease in net working capital, and that is, as you know, inventories, trade payables, trade receivables, and work in progress. And the decrease is mainly driven by a decrease in the trade receivables due to the fact that we last year had some trade receivables which were not received at end of Q2. They came in beginning of Q3, but that is why the decrease is that significant. Then if we look at the cash flow from operations, then we have a minus 3.6 in Q2 compared to 9.3 negative in the same period last year. But if we look at the full year, also historically seen, then normally we generate a positive cash flow, and that is also the expectations for current year. So having a minus on 3.6, then we will generate a very positive cash flow in the second half of the year. Year to date, the negative cash flow is approximately 9.2 million. So we will expect to have a positive cash flow development in second half above 10 million Danish kroner. And what we also look into is that normally second half of the year is strong. So we look into a growth in revenue, a growth in operating income, and also a positive cash flow in second half of the year. Then if we look into net debt to EBITDA, ending at 0.7, and that is compared to last year, a decrease on approximately 42%. That is way below our ambition on 2.5. So the gearing that we have in our ambitions is below 2.5. Given that we have 0.7, then it gives us a possibility, if we see some acquisitions in the market, to actually to use the power in cash and net debt towards fulfilling some acquisitions if we see someone which fits into the SKAKO vibration business. I think that it was what I had on the financial figures. Then I will hand it over to Lionel.
Yeah. Thank you, Thomas. Happy to be here with you and to give you some more information about SKAKO. So as Thomas mentioned right before, we delivered equipment to customers which are in three main industrial segments. The first one is the mineral segment, which is still the most important for us in terms of revenue, represent 48% in the last quarter of our revenue. And I will go deeper on that on the next slides. The second one is the fastener segment. It's an industry where our customer or the user of our machine produce small metallic part like screws or nuts. It's a niche, an industrial niche, but we are leader in this niche. And this segment is very close to the automotive industry and the construction sector as well. And the last and the third segment where we are, it's a recycling industry, represent now more than 1/3 of our revenue in the last quarter. And this is a segment that where we put more effort to develop. That don't mean that we don't want to develop fastener or minerals, but we spend more resource to develop the recycling segment. The reason of that is that everybody expect that this industry will grow in the coming years. The reason of that are three main reasons. Some government incentive, and especially in the EU. To give you an example, the European Union has a target to recycle 65% of all waste in 2035. So it will require a lot of investment for that. The second reason is some boost from the private sector. For the last decade, there will be an investment in the recycling company around 136 billion euros. So it's a lot. And for sure, the last reason is the pressure from the people, from the consumer and society drive. There are many companies now who can propose, for instance, recyclable packaging, this kind of things. A lot of brand like you can say a lot, Apple, Zara, a lot of branding that. So we know that this sector of industry will grow, and that's why we are spending a lot of resource to develop this segment. We made the acquisition of Dartek, of SKAKO Dartek now 5 years ago, and now the company is fully integrated, and SKAKO Dartek had developed a special range of product for the recycling segment. And now we are selling the equipment of Dartech and the other equipment of our range all over our sales network. We are increasing our sales force as well, especially in the European Union, to be able to sell more. And we are adapting some of our product, I would say all product, but product which were designed for the mineral segment and for the fastener segment to the needs of a customer of the recycling segment. So that's one of our main strategy. But yeah, I've already said that the last deep dive. So and this time I would like to focus a little bit more on the mineral segment, which is the historical segment of SKAKO vibration, and which remained the most important in terms of revenue. And for SKAKO, this segment is split in three main sub-segments, I would say. The first sub-segment is a mining industry. So this is the industry where our customer or the user of our machine extract or produce any type of ore. You can imagine it could be iron ore, uranium ore, nickel ore, phosphate ore, of course, coal, these kind of things. And for us, this industry is mainly located out of Europe and especially located in Africa. So most of our customer for the mining industry are African customer or user as well. And the second one is the construction industry. So this is an industry with quarries, sand pits, cement plant, this kind of thing. So all type of industry which extract and use stones, I would say, to make buildings or roads or cement. And this industry, contrary to the mining industry, for us is more located in Europe. So there is a real big difference on the two one. Despite it could be this, for some people it could lose the same. But mining industry for us is more out of Europe, and construction industry and quarries are more located in Europe. So a big difference in terms of market. And the third one, which is an important one for us as well, we have a very, very strong reputation in this sub-segment. That's iron and steel industry. Our customers are located everywhere in the world for this segment. And this is where our equipment are used in the early process of production of steel. It means when the steel is not steel. So when you have iron ore, coal, coke, all the components which are going to be melted to make liquid hot iron. So and then our equipment are very useful for our customer. So that's the three main segments of the mineral segment. And I would like to focus a little bit on the first one, so the mining sector, and especially on this market and this country, Morocco, which is one of the main mineral market for SKAKO vibration. You must know that Morocco is one of the most developed country in Africa, with average growth of GDP of 5%, around 5% for the last decade. And Morocco has three big industrial sectors. The first one is the automotive industry. The second one is agriculture and food industry. And the last one is phosphate. It's a big deal there, phosphate. And why phosphate? Because Morocco owns 70%, so more than 2/3 of the world phosphate of the world phosphate reserve. So it's they have a very, very huge stock of phosphate. But what is a big trend that Morocco is not the first producer of phosphate, and Morocco would like to be a little bit what the Saudi Arabia made with petrol. They would like to do the same with phosphate, and to produce a lot of phosphate to be able to control, of course, the price of phosphate. And for that, they have a company called Office Chérifien des Phosphates, OCP, which manage the phosphate reserve of Morocco. And OCP launch regularly some investment plan to increase the production of phosphate of Morocco. And recently, in 2023, OCP launched a 5-year investment plan of $13 billion to once again increase the production and extraction of phosphate from Morocco. You must know as well that we have we are present there for a long time. We have for more than 20 years, but we have a branch company for more than 10 years there. So we have people, Moroccan employee of SKAKO Vibration in a SKAKO Vibration company in Morocco. So it's not a new story for us. Morocco is located in the northeast of Africa, and you can see on the map on the right, the brown area are the phosphate reserve of Morocco. So you can see where they're located. And one of the issue or challenge that the mining company all mining company have this challenge is to transport the material, the raw material, because some mines can have a production of more than 1,000 or 1,000 tons per hour. So you need to transport that, and it costs a lot of money. It's really a logistics challenge for them. And you can choose to transport that by truck, for instance. It's the simplest way, but it's the most expensive, and it's not good for environment. Some customers decide to transport by train or by conveyor belt. And OCP decided some years ago to transport phosphate by pipeline because it's for them it's the best way to do it. So they have some equipment that can dilute the phosphate solid into the water to make kind of slurry, and then the slurry with big pumps is sent by pipeline to the port, and then at the port they remove the water, they dry the phosphate, and they can ship the phosphate and send it to country everywhere in the world. And SKAKO has delivered many equipment for making this slurry. We call that scrubbing lines, and this is the project that we have received from OCP. So beginning of August, OCP awarded an order for more than 150 million DKK to SKAKO for 4 scrubbing lines. So this is the sketch you can see, these 4 scrubbing lines. So made of each line is made of a big washing drum. So this is this big tube that you can see. It's a kind of big washing machine that where the phosphate is mixed with water, and then you have after that you have a big banana screen, called the banana screen, where the phosphate, where we remove the rock part of the phosphate, which is not the good product for the customer, and the slurry go through the screen and is sent to a big tank, and then to but there is other stuff around that, but very simply it's the idea, and then the slurry is sent to the port. We have already delivered the same line actually some years ago, the same line for OCP. So we know exactly what we are going to do. So we are going to do 4 times the same line that we already made to OCP. That's one of the reasons why we have been chosen by OCP. And this project is scheduled to be delivered over the next 2 years, but we'll have a limited impact on 24. So most of the revenue, a very large part of the revenue, will come in the year to come. Yeah, it was one to give you one idea, a big picture of this activity that we have in Morocco. So I can give the end to Thomas again. We cannot hear you, Thomas.
Thank you for driving us through this customer segments. Our guidance is maintained as earlier. So we still expect a organic growth on 2 to 5%. That means revenue on approximately 253 to 260 million. And that is what I also mentioned earlier. We see a growth in revenue in the second half of the year. EBIT in our guidance is 24 to 28 million. Given that we realized 10 million in the first half of the year, then we expect to have 14 to 18 million in second half of the year, and that is due to the normal seasonality that we have, that second half of the year normally has a higher activity and also a higher earning than first half of the year. So we see growth in revenue, EBIT, and also in cash flow in second half of the year. And as Lionel just mentioned, the big order from Morocco will come into the books in 2025 and 2026, so it would have a limited impact in 2024. And with those words, then I think we should hand it over to Rasmus and have some questions.
Very good. Thank you very much for that, Thomas and Lionel, for the presentations here. Yeah, let's jump to some of the questions. There's a good number of questions, so I think we'll just dig into them straight away. There was one here on, you conclude in you, yeah, let me say, I've also published the questions, so you can also read them by yourself with the audience. They should be published below the screens with the slides and the pictures of us here. So, but I'll try to read them loud here also. You conclude in your Q2 report that the minerals segment has lower margins than the other segments, which impacted Q2. At the same time, your new substantial order in this segment, and you also write that some very large tenders are coming up for decisions within minerals. How can we look upon your margin development going forward into second half this year, considering your full year guidance is the same and indicative as similar EBIT margin as last year? I don't know, maybe we should take that one first.
Yeah, if we look at our guidance, then we guide at revenue and we guide at EBIT level. We don't guide at EBIT percentage. So of course, if minerals will maintain to have a bigger share of the revenue in general, and plant will keep up, then of course it could impact the EBIT margin that we have. But at the moment, we still maintain our guidance at the level that we have given to the stock exchange.
Very good. And also sort of asking here also, looking into 25, 26, can we anticipate a lower gross margin with a probable higher minerals mix?
And that is of course difficult, because as Lionel mentioned, then the big order from Morocco, it is an order that we have produced before, so it is known technology, but given we have a little lower margin in minerals, then it can impact, but what we guide on is a EBIT level, not an EBIT percentage.
Very good. And then the second part of this question. So secondly, how do you look on the price competition within these large tenders that are coming up? Has the market become tougher in this aspect? And can you secure large orders that keeps you going towards your increased long-term margin goals?
A few words about that. As I explained, this order was due to our experience that we had in this specific process. So for sure, the competition is lower when you have this type of knowledge in the company. So yeah, I have not at all concerned by our margin in the future about that. Yeah.
Very good. And then there's a request on having an earlier conference call and an earlier reporting date, but we'll pass that on to you, Thomas and Lionel. So I don't think we'll go into those discussions, other than you now know that this could be requested in the market. Then there's a question on visibility. How comfortable are you with this year's guidance? Can you reason how you set the guidance? You mentioned some very large orders within minerals. Can you elaborate on the size of further orders besides the already communicated order from OCP in July, or was it August? Yeah.
It will not be the same, not at all the same size as this order, because this order is absolutely the record order. But what we can see, the trend is that the construction sector in Europe is a little bit down. Everybody knows that. But on the other side, fortunately in SKAKO, we have many different legs and a very good stability. That's something that we can prove every year, I would say. When the construction sector is a bit low in Europe, it is high elsewhere. And this time we know that the African countries. The market is better in the African countries. So we expect to get more order than before coming from the African market, actually.
Yeah, and if I should add something to this, then we can see that if we look at the revenue for the first half of the year, then we have 68%, sorry, of our revenue coming from plant, and we have an order backlog on 60 million Danish kroner. So that gives us approximately 150 million Danish kroner, because a large portion of the order backlog is of course for plant sales, and then given a stable after sales as we have seen the last quarters, then we feel comfortable about the guidance that we have presented.
Very good, thanks. And then there was a question on the OPEX. Can you elaborate how you see OPEX grow in 25-26, particularly how you see OPEX growth in relation to sales growth? You say that the business model is scalable. I guess it's fair to assume higher margins than the target around 10% in 25-26 when revenue growth is strong.
We have, of course, as we do every quarter, visited our midterm targets, and even though that this, of course, is not an order that is put into the books that we're looking into for the coming years, then of course we always from time to time win some big tenders, but right now we are looking into the midterms to receive them.
Very good. And then the last questions from this, it's on the capital allocation, M&A versus buyback program of SKAKO, since the share has a rather low valuation.
Yeah, and as we have mentioned also earlier quarters, then right now we are looking into paying the dividend for the shareholders. We don't have any buyback program at the moment.
Very good. And then we have 5 questions here from somebody in the audience. So I'll just take them one by one. But as it says here, first of all, congratulations on the Moroccan order you have won recently. I would like to ask 5 questions. The first one is with regards to system sales. Do customers make prepayments? Can you elaborate a little bit on how you manage payment risk from your Moroccan customers?
So yes, customer make a prepayment, and we work with a letter of credit for Moroccan order and this order specifically. So there is no risk of in the payment for this order. Everything with bill guarantee by bank, so no problem.
Very good. And the second question here goes, was the decision of your Moroccan customer solely based on price, or did other aspects also play a role? You mentioned something about digital control system. Could you elaborate a bit on this? And moreover, how important is the service aspect of for your customers? How do you compare your service network relative to that of your competitors?
So as I told you, of course, the experience we have had in this function of making this phosphate slurry was very important there for this order. Regarding the digital control system, so it was not only the price, it was as well, of course, the experience that we had. The digital control system, yes, it's more and more important to our customer, and especially with this big mind, they try to find the way to control as efficient as they can all of their equipment. So it's something that we already delivered as well in the first line that we delivered to OCP. So we have the experience as well about that. The last question is about the service. We have typically, this is why one of the reasons why we have this company in Morocco is to be able to have a better service with the customer, with the Moroccan customer. So we have a good service in Morocco, especially in Morocco.
Very good. And then a third question, it goes, has the relative small size of the SKAKO group ever been a constraint to win large tenders or to be invited in for large tender orders?
Yes and no. This, as you can see, this order show the reverse. So yeah, okay. We have a very good reputation in the equipment we make. So when there are some tenders with our type of equipment, for me there is no specially limit or constraint due to our size, because due to our reputation.
Good. And then a fourth question also on these large tenders coming up. You mentioned that there are some very large orders in minerals coming up for decision in the next 2 quarters. Did these large tenders also occur in the past? And if so, did you participate in these large tenders? And also, if these large tenders did not occur previously, can we expect more of these large tenders in the coming years due to sort of an increasing investments in minerals?
So I would like to specify that these very large orders which are expected are not at all the same size as the order we just got from OCP. So yeah, they are. It's very difficult to forecast anything in the mining sector. So the first question was about did they occur in the past? Yes, they occurred in the past. And we do not specially participate in larger tender compared to before. We already got some very large order from Morocco, especially. So and can we expect more? It's a bit difficult to say anything about that.
Good. And then the last one on the net working capital that is expressed as a percentage of annual sales, and it says here it's quite volatile. Can you provide a range for net working capital as a percentage of annual sales going forward?
No, it is very difficult. Also, if we look into huge orders like the OCP, then of course there will be prepayments, and that will develop net working capital up and down. But we see it has been more stable, even though that if you calculate it at a percentage of annual sales, then it's fluctuating quarter by quarter. But that is also impacted by when do you invoice your customers? Do you invoice them end of a quarter, or how is the sales being produced and sent to the customers? And then it can be impacted over a quarter.
Very good. We will conclude by that. Thank you very much, Lionel and Thomas, for the presentation, and also for giving us sort of a deeper understanding of the minerals part here. Very interesting.
Thank you. Good weekend to you.
And the same from here. And thank you also to the audience, and also thank you for a lot of very interesting questions. We conclude by that. Thank you.